el impacto en el precio del oro de esta medida. Saludamos a Carsten Menke, es CFA, Head of Next Generation Research in Julius Baer. Carsten, thank you so much for having us a few minutes.
Thanks very much for inviting me.
Carsten, the leaders of G7 nations will announce a ban on Russian gold imports for Moscow's invasion of Ukraine. Which could be the impact of this decision on gold prices?
Oh, I don't think there will be a big impact on the gold market. I mean, we have seen a little bit of a positive price reaction this morning here in Europe. Prices trading up like 0.5%. And I think this very much underpins our view that the impact on the gold market should be quite limited of such a ban.
And fears of recession in the US are growing. In the case of recession in the US, how could it affect to gold prices?
Yes, indeed. So a recession in the US, from our perspective, is the much more powerful element potentially affecting the gold market. So this is not our base case, but still the risks have been rising. And why is a recession in the US more important than a ban of Russian exports? Well, because the gold market is very much demand-driven. It's driven by the demand from safe haven seekers, so investors who are seeking shelter in times of crisis. So, for example, in case of a recession. And the supply, which would be impacted by the export ban, that doesn't really drive the gold market.
And Carsten, considering the current market scenario, how could evolve gold prices next month?
Well, it really depends on what the economy does from here. Because if you consider how gold has been performing, some might say it was disappointing in the sense that we're seeing very high inflation, we're seeing rising recession risks, and still gold is basically flat for the year. But if you consider what other asset classes have been doing, equities, bonds, if you also consider what the US dollar has been doing and what US bond yields have been doing, I would say that gold has done pretty well. Looking ahead, it really comes down to the question if we run into a recession, and then gold would see more upside from our point of view because bond yields would go down, because investment demand would increase. So this is the positive scenario for gold. And the more negative scenario would be easing recession fears, easing inflation, but I don't think this is very likely at the current point in time.
And we are seeing a situation of extremely high prices, aggressive rate hikes that will hide on affordability and demand. And taking into account or considering this scenario, S&P now forecasts a low growth recession next year. Where do you see this recession? It will be in 2023. It will be this year, by the end of this year?
Well, we as Julius Baer, we don't see a recession at all. So that's the good news. But admittedly, so we have a 15 to 25% recession risk, which is lower than in the market, because we think the job market is still good. We think that consumer consumption demand still holds up, business investment still holds up. But clearly, if we were to see a recession, it would happen sooner rather than later, because all the pain points which are currently around, high gasoline prices, high food prices maybe, overall inflation we're experiencing, rising interest rates, all that would be hitting the consumer at the moment. So either now, well, I don't want to say either now or never, but clearly the focus of any kind of recession in the current market environment would be rather in the next few months rather than in the next year.
Carsten Menke from Julius Baer, thank you so much for this analysis.
You're welcome. Thank you very much.
Nos quedamos, por tanto, con esta